Welcome back. 273 points over on the Nifty. Jigar Mistry, co-founder at Buoyant Capital, is now joining us to discuss fundamentals of the market. Jigar, thanks very much. I mean, things evidently have gotten a lot tougher. I spoke to you, 6-7 days back. Your framework was broadly constructive. How are things looking now, Jigar?
Hi, Prashant. Thank you for inviting me again. I think it was slightly longer, 2-3 weeks back was when we last spoke, and I think there are a few things that are becoming very evident since then. You break down the numbers on how big this thing can be. It's clear that India will have a very tough path coming out of this. The measures that have been announced are more to address from a medium to long-term perspective. And given India's fisc, most people are now congregating around 5% decline in GDP. And even if you're working with, say, a 20% drop in net tax collections, you're looking at, taxes falling something like 6.5 lakh crores, your disinvestments falling short by 1 lakh crores, and 1.5 lakh crores of incentives that have been announced in the fiscal stimulus package. So essentially 8.5 lakh crores, which can be funded by, say, 5 lakh crores of incremental borrowings by the center, and 1.3 odd lakh crore in higher fuel cess. So even as things stands now, you're looking at more than 2 to 3 lakh crore of fiscal gap, which essentially RBI has not yet announced that it will monetize. So, there was very little room for them to do more fiscal stimulus unless they're happy to print notes. And that sort of means that a lot of sectors will slowly and only steadily climb back. So since we have last spoken, I think we have created some more cash in the fund, and hopefully we'll get to invest it during the course of this month.
Jigar, we are crunched on time. The market is getting crunched as well, so everything is crunching. But what are the big ideas you have, Jigar? I mean, you always have interesting bottom-up sort of stock ideas, so I want to get to that.
Right. So, Prashant, the ones that we have discussed so far, I think the consensus trade is essentially long pharma, long a few of these names like Reliance. The only issue there is that, people are doing that without a credible story because everyone else seems to be doing it. It could well be just a trading bet where most people get positioned, but beyond that, that's not a place which can generate alpha over the next 2 or 3 years. The places that we are interested in remains companies like, say, SIS is one company we have discussed in the past. They have a guarding solution. As India slowly opens up, offices operating at 20% or 100%, you'll need guards to guard exits. So that is one, business which is very interesting to us. Secondly, we have discussed Sun TV in the past. That's one name that we continue to own. That's very interesting because you looked at the recent announcements of the ratings, and Sun TV is slowly and steadily climbing to the top in terms of where the South market is. In the lockdown library becomes much more valuable than fresh content. So that's one company where we are much more interested. Historically, insurance is a place, both life and non-life, where we have found a lot of interesting ideas. Max Life, or essentially the listed entity Max Finance, and GIC Reinsurance are the two businesses that we like. So we are looking for falls to invest further into that. Financials is becoming a little tricky place because I think whenever most companies or banks are coming out with reasonably good numbers, what essentially transpires over the course of next 2 quarters is what people are waiting to see. And when you do that, it's easy to make a case that, even a 6% NPA would mean like 30% of your book value. So financials would, take time to recover. The top of the line banks are the one that we like there. So ICICI Bank, HDFC banks are the one that we own. And that's the place we will look to buy once they provide enough value again.
All right, Jigar, we will wrap it up on that note for today. Thank you for joining in. Well, there are some buyers of bank stocks, at least in this market, whether a complete collapse seems to be underway on the bank Nifty. Need to take a very quick break. On the other side,